we signed the deal. We did what's called a split sign and close. I think I told you this offline, but like, so we signed on the 21st of December and we closed on the 4th. So imagine the most like anticipatory 2 weeks of your life. The deal is done. Like
this is, I don't know if we're going to run this, but this is the M&A version of Blue Balls.
Yeah, I didn't want to say that, but yes, it's just like, oh my God, is it gonna like it's gonna happen? It's like,
yeah,
and then your family, like nobody knows you should congratulate you. Like when I was like, that's not closed. And my dad's like a real estate guy, so he's like, you stay on this every day until like it's not done until the money's in the bank. Like so, there's like all these like it's just like sitting there, and that was it's just a highly anticipation oriented period.
What's up, everyone? I'm Alex Lieberman.
Yo, this is Jesse Pujji.
And this is The Crazy Ones. Okay, I'm going to start with something. I have a little surprise.
Oh.
Tell me if you can hear this. It's the acquisition alarm! Woo woo! Ladies and gentlemen, welcome back to The Crazy Ones. My co-host, Jesse, Class A Crazy, officially sold his business Ampush after, 13 years?
13 years.
13,
overnight success.
the 13-year overnight success. Congratulations, man.
Thank you.
We are going to talk about a lot on this episode, from the origin story of Ampush, what the business is so that you have some table setting, but then what the process is like of selling a business. It can be brutal at times. It can be long, but there's so much you learn. And then, of course, I'd be remiss to not ask the squishy questions about the emotions around the process, what it was like to share the sale of a business with your family. So we're going to hit it all. Stay tuned for everything. And welcome back to The Crazy Ones, everyone. Okay, so you sold your company. I saw, pretty funny, I saw the announcement on Google, I think, before you saw it.
I know, I was just going to tell you, you were the person who told me that it got announced.
It's so ridiculous.
Which is lesson number one of selling your company. It ain't your company anymore, so they didn't call me and go, "Hey, can we send this press release?"
That is the most ridiculous thing. It was supposed to go out
last week, and then I was just told like it's going to go out sometime this week. And then literally, like, you go, "Hey, it's public now. Can we talk about it?"
It's absolutely ridiculous. I have to start with one question. How much did you sell it for?
One day I'll share that. Episode
I was talking to Jesse
452.
I was talking to Jesse before this. I said, "Is there anything off limits in this conversation?" And he said, "Nothing is off limits except for talking about the price." So I had to ask.
I think the pertinent detail is like it was a very good outcome. It's like life changing, and it's it is the moment I think I dreamed of as a 20 something.
How old were you when you started? Do you remember the exact age?
Well, here's a funny story. So the name Ampush, you know this, but the audience might not know this. It's the first two letters of the founder's last name. So Chris Amos, Jesse Pujji, Nick Shaw. And our first company, we started sophomore year of college. We were super douchey, and it was called Amos, Pujji, and Shaw Inc. It was like,
oh my God.
And it was our t-shirt business. And, one day we were looking at the forums for it, and Chris, I think, came up with it. Chris looked at it and he goes, "Man, that spells Ampush." And then like immediately we jump on Google, like, is that domain available? And it was available. So we've owned the domain and I've kind of used that name for various things since 2004.
I love it.
And that's how old it is. And then we held on to it and we didn't do much, and then the company sort of as a real business and, and as adults we started in late 2009 and 2010.
I will say the name has a very good ring to it for like assembling initials of names. Usually when you try to do that with founders, like it doesn't work out. Like if I try to do it with Austin Reef, Alex Lieberman, it would be like Lara. And I really would have been upset if Morning Brew's name was called Lara. So it's a catchy name. I want to, okay, so the way we're going to do this is I want you to just set the foundation of the sale. So, when the deal was done, who you sold it to, and then
Sure.
we're going to pull back the timeline and start working towards, this week that everything just happened. So tell me a little bit about the acquisition.
Yeah, sure. So it was acquired by a large tech-enabled marketing services business called Tinuity. And Tinuity has a really cool origin story itself, but it was a roll up of a variety of different marketing services and agency businesses. That business is backed by a really awesome private equity firm called New Mountain Capital, who I got to know really well. I knew a little bit prior to this process, but really got to know them well and like love their approach. They're all about finding a good sector and actually buying a bunch of businesses inside of it to create a bigger business. They're super entrepreneurial. Some of the partners there were awesome. Like they were generally really great party. So the reason they bought the company, you know, they had their eyes on it for multiple years. And so when we finally kind of put up the flag, which we can talk about, they pounced pretty hard on it, which was exciting to see. They had bought one small social agency without a lot of tech and data chops. And I think they felt like they could really, that the Ampush offering would enhance what they were doing in a very meaningful way. And so I think for them, they're trying to build the large, I think they call themselves the largest independent performance marketing business out there. They run Amazon, television, Google. And I think this was sort of an area where they thought they could build something really awesome and big and kind of upgrade their capabilities.
And I feel like that it's a relatively common strategy in, I guess, like the private equity, middle market PE world, where like you have kind of like an anchor business, and then that anchor business does all of these kind of add-ons to increase the overall value, right? Like that's a common practice.
Yeah, very common. The other thing that happens, you know, it's kind of a cool thing, is it's called multiple arbitrage. And, you know, one thing that just happens in business is as your business gets bigger, investors pay a higher multiple. It's more stable. It's demonstrated more sort of staying power. And so what a lot of these private equity firms do, and we were sort of a part of this arbitrage, was, hey, I can pay you, you know, X multiple. I can buy at X multiple, but I can sell at Y multiple, and Y multiple is, you know, 2X or 50 to 100% greater than what I'm paying. And so naturally, every time I bring on $1 of profit, it's worth more to me as the holder. The other cool thing is, you know, especially our management team and our CEO got a lot of equity. We got a little bit, which was by design, but so we were riding a little bit with them in terms of what's going to happen.
Got it. Sweet. So I want to talk through the mechanics of the deal, but I would say probably some chunk of our audience knows your different businesses between Ampush and then all of your Gateway X businesses. But also, you know, I think the pod has grown a lot in the last month or two. So there are people who may not know your story and what Ampush is. So can you just provide context on what Ampush is, you know, when it started, what the offering was, so people can understand why a company would look to buy you guys?
Yeah, totally. Let me take 5 minutes to tell the whole saga, because I think it's worth it. Just because I think you will appreciate the wholesale more knowing what all has happened. Because Ampush is really, I mean, Ampush for me, and just to talk, you know, get the emotional a little bit, like it is the place I grew up as a business person. It's where I learned all the things I've learned. Everything I do, without a doubt, from here forward and from here forward, will be Ampush at its core in some ways, right? And it's just like the first of anything, right? It's the first child, the first love.
Yeah.
And it's also been multiple businesses. So I'll tell the story. You know, I mentioned earlier my college roommates. All of us went to go work in like finance. We were in the financial crisis. Nick, one of our co-founder, you know, one of my partners, he was going to a hedge fund in 2009, and he gets an email. I get an email or message one morning from, I'm sitting at Goldman Sachs, and it says, Blue Wave has blown up. It's down 40%. And I wake him up. He's in India at the time working at Morgan Stanley. And I'm like, hey, your hedge fund's gone. Like, and he kind of paused, and he was like, you know what? I was like, I can get you job interviews. No big deal. We'll figure this out. And he's like, I'm going to chill. I'm going to see what happens. And so he actually, I think that was a big move for him. Without us, I was still at a job and Chris was at a job. And he said, I'm going to just hang out. And he like started kind of working on a project. And then, you know, you'd call me every week for advice. And then, like, you know, as these things snowball, I was kind of like, I wasn't loving the job anymore. And, you know, one funny story is, you know what GLG is?
Yeah.
So it's Gerson Learman Group. It's this expert network where like private equity firms and hedge funds can call experts. And so I told my firm probably in late 2009, I'm leaving. I'm going to go start a business. You know, if you leave for a reason like that, they're very supportive. So they're like, oh, why don't you hang out for a few more months, transition your work? What can we do for you? So I was like, well, I want to just use GLG. Goldman has like an unlimited, probably $1 million a month subscription to GLG. And every day we had 3 experts calls with like digital marketing experts. It was amazing. I mean, dude, you couldn't ask for
that is the most incredible hack.
Best hack ever. We got the sell side internet analysts to come pitch me and tell me like, what's the growing sector? And so we had a lot of support in getting it going. And we were really keen on bootstrapping. And I think I have this deck. I don't think I've ever shared it with you, but I will, which is like all about creating a really cool culture, generating cash flow, and then multiplying it many times over. And many times, like what Gateway X is today, that vision was back in 2009. We had no idea how to execute it, but we wanted to find a business we could get going, we could start and sort of multiply on top of each other. And so we heard from people, they say, oh, you're good with numbers, data, go look at digital marketing. Okay. So a bunch of 25-year-olds, we said, okay, we'll go look at digital marketing. We start poking around. We go, we have no relationships. We don't know anyone. They go, well, there's this one sector called performance marketing. It's kind of like Wall Street. You spend your own money, and if it works, you make some money back. And if you don't, it doesn't work. So we're like, okay, performance marketing. And we're like, what's a good space to do this in? And at that time, just totally randomly, Kaplan, University of Phoenix, online education was having this day in the sun because it was a recession. There was like this legal issue, the loophole that they were taking advantage of. So we decided, just totally screened our way into this, meaning we, no passion. We're just like, we're going to start generating leads for online universities using digital marketing. We're going to arbitrage it. We literally bought AdWords for Dummies, start reading them. We had financial models and PowerPoint presentations, and we didn't know anything. We hadn't made a single sale. We for 8 months we did this. The one funny hustle thing we did, you probably heard this story from me, is there was a company called Quinn Street that went public early on in us getting going, and a friend of mine called me, who was a hedge fund guy, and was like, isn't this what you're doing? Like, this sounds really familiar. And he's like, explain it to me. So I started walking him through how digital marketing works and how you buy a click and then you get a conversion. And he was like, this is amazing. This is so valuable. And like the light bulb went off in my head, and I called GLG back, and I used to be a customer. I go, can I be an expert now? My rate is $500 an hour. And I was like, are you getting questions about this Quinn Street company? And they're like, yes, we are. And I'm like, great. And I start getting these calls for $500 an hour. And then someone goes, do you have more research or data? You know this space so well. And of course, I'm like, sure we do. So Nick and I spent one weekend making a 50-page deck. I'll send it to you after this call, or we can post it.
Yeah.
That's all about the online lead gen industry. And we started selling it for $5,000 a pop to hedge funds. And for a minute, we were like, should we do this business? Like, this seems like a way better business. So anyway, we were doing a bunch of random stuff for the first 8 months.
Were you using that just to fund your business? Like, was it enough?
The way we funded the business was the three of us. There were a few sources of capital. The three of us each decided to put $33,000 in, which we had made kind of working on our Wall Street jobs. We were 25, 26. We had one of the most unique arrangements in the history of co-founder arrangements, which was Chris had a commitment to Carlyle. He was a private equity, and he had 9 more months left on his contract, and he didn't want to burn the bridge and leave early. But we all agreed that basically we would treat ourselves as one entity, and he would give up 2/3 of his salary to the entity while we tried to get the company, and that's how we all remained equal partners.
That is so interesting.
Which is like our accountants were like, this is the craziest arrangement we've ever seen. And then we used credit card debt. Like, we used American Express. Actually, one of the saddest moments in the closing of this deal was when I had to cancel the Ampush Amex, because I was like, oh my God, this thing, like,
I hope you kept the card.
Yeah. I mean, I have the card, but it's like, damn,
yeah.
It was a moment. But, and then we sold these reports and other hustles to kind of give us enough money to keep going. So anyway, we learned how to do these ads. We build a landing page and a website. I think I'm super smart, start running Facebook ad or Google ad campaigns on AdWords and just start losing our ass. I mean, we would spend $5,000 and we'd get 5 leads.
So you were just shitty at the one job you were doing.
The one, I mean, beyond shitty, right? And like didn't work.
Yep.
Made it so complex, overdid it. And we're just like, what were we thinking? This was a terrible idea. We have no idea what we were doing. Like, it really hit us at that moment. You have all the like kind of positive version of it. And we had this was something we were starting from a cold start. We had nothing going for us. So we grinded for 90 days, eventually started making like a 5% profit using Google ads and just really simplifying it, frankly, copying our competitor. We just found what competitors were doing and started copying
Which,
it.
by the way, is like the best hack in the early days of the business, is just look at a competitor who probably has tested everything because they're
everything, right?
Better
they're buying this keyword, they're sending it to this funnel. Like, I literally that was the final solve. I was like, I want to, because we were trying to make our website really fancy because we thought the websites in the space looked shitty. Yep. Then we realized, no, we're the, we don't know what the hell we're doing. Drag and drop. Nobody wants that. They want to quickly move through the funnel and submit a lead, right? Totally. And so we start copying a better. We're making a 5-10% margin on what we're doing. And, that was right around the time Facebook had launched the first version of their self-serve ad platform. And we actually ported over the same, back then there was this thing called AdSense, which is now Google Display Network. And you could say like categories like, painting, oil drawing, oil painting, and they would contextually target on a website. We took those same exact ones and copied them over to be likes and interests on Facebook. And then we'd make ads that were like, are you an art lover? You should get your online degree at, whatever. And what was a 5% margin on Google was a 75% margin on Facebook.
Why?
Well, we were the first movers.
Yes. So there was just no demand there yet.
There was no demand. No one knew how to use it. You had to build one ad at a time. And literally within 6 months of doing it, we had guys in India doing it. It was our first version of Growth Assistant, right? But we had people just uploading one ad at a time and going. And then the clients called us and said, these are amazing leads. Where are you getting them? And we said, oh, well, we figured out, and that became this calling card. And here, I'll tell you a crazy story. In June of 2010, the business did $100,000 in gross revenue. By August of the following year of 2011, it was doing $2 million a month in gross revenue.
That's absurd.
It just skyrocketed. And it was all Facebook, right? And we not all Facebook, but it was 70% Facebook. We were scaling it as fast as we possibly could.
Were you scaling clients or just you were
scaling
making
clients?
A ton of? Okay,
yeah, because there's only 20 clients that matters, like Kaplan University of Phoenix,
Yep.
Art Institutes.
So you were still all exclusively in education.
All land and expand. Yeah. Correct. Exactly. All in education, and growing that business really fast. And then, we started to get a little bit like the whole lead gen category, performance marketing, was a little bit skeezy. Like we'd go to these conferences we didn't like, we just like, this is not a space that we were proud of. We wanted to tell our grandma about it. Like there's a lot of, you're selling people's information. It just wasn't our cup of tea, but the business was making a lot of money. And by the way, it was, for everyone's listening, like it was making millions a year in profit, and we were 18 months in, and all coming from Facebook. And we got, a call from Facebook, and actually really one of these serendipitous things where our account manager was this awesome woman named Pat Lai, and she moved internally at Facebook from the account management group to the partnerships group. And one of her mandates was go find companies that Facebook can partner with to build around their ads ecosystem. They can build software, they can build services. So Pat, I jokingly call her the fourth co-founder. She was like, guys, stop this lead gen stuff. You're like literally so smart on the platform. You should be building a software and tech platform. And so in early 2011, I think, I broke off. And Nick and Chris continued to run the core business, and I started a new business that for many years we called Ampush Social. Now, eventually we sold the lead gen business off in like 2013. We divested it. We can talk about that. And we went all in on the social business around late 2012, early 2013. We went all in on it. And, at that period, we were one of the few companies who knew how to make Facebook ads work, one of the few who had access to Facebook's unique API. We knew it wouldn't last forever, but like we were early to it. And we were getting calls and customers that like today were dreams. They were tiny companies then. We got this one company like, hey, we got cabs in 10 cities. Like, I don't know if it's going to be very big. And it's like, oh, it's Uber. Okay. Yeah. And like next thing you know, we scaled them to 600 cities globally. We were spending $50 to $100 million a year with them on driver acquisition, getting drivers to sign up to be on the platform. Dollar Shave Club, Clash of Clans,
it's insane.
Peloton, Blue Apron. I mean, you name, like we had a stat that 8 out of 10 unicorns have been Ampush clients at some point.
Yeah. And
so for us, it was, and we originally wanted to be a SaaS business, by the way, and nobody wanted to buy the software. They wanted services. We were bootstrapped. We didn't know SaaS service. We didn't know any of that shit. We just said, great, they need services. We started hiring young, really bright kids, training them on how to do this. Nobody, 80% of Ampushers don't have a marketing and advertising background. We taught them from the ground up. The business grew. And, 2015 came around. I was probably your age, a little bit older, 30. And we were like, we're going to sell. We're going to grow really fast and we're going to sell. And we ran this process and we ended up with a handful of really good offers. But in my mind, I thought we were going to sell the business for 9 figures. I was like, we're going to sell it for 9 figures.
And how big was the business then? Can you say?
Probably shouldn't, but
okay.
it was well. So what we'd been told at the time, there was like companies like Rocket Fuel and Marin Software that were trading. We were $1 billion market caps in 2012 and 13. By 2015, 16, they had gone down 80-90%.
Why?
And so as somebody, they were just ad tech businesses they were sort of overhyped. But when we greenlit ourselves the strategy, we said, we're going to grow and sell for a huge multiple. Basically the multiple didn't come in. It was still life-changing money. It was still bootstrapped, no outside money. But one of my big lessons from that, looking back on it, was like, I did not understand my emotions. I was so sad and disappointed because I was like connecting myself to my valuation. And I was like, no, that's wrong. That's wrong. And I was, no, the market's never wrong, right? I mean, you go out and you say what it is. And so we ended up, everything happens for a reason. We ended up selling a minority stake to this really cool company called Red Ventures. And we actually gave them an option to buy the rest of the business for, you guessed it, 9 figures. We literally, like, because in my brain it was so clear that that was my mark I had created for myself.
Yeah,
Mark.
you had to keep the dream alive.
I had to keep it. That's exactly what it was, right?
Yeah.
And the deal with them was kind of a cool deal, by the way. Like, it was unique, and maybe only very few companies would have done it. They bought, a stake in the company, a 20-ish% stake in the company. We gave them an option to buy the rest of the business at a nominal number, not a multiple. So normally you'd give an option to buy at a multiple.
Totally.
But we said no, nominal number. And the reason for that was it was a 2-year option, and we were going to behave as one company. So because they basically had all the incentive in the world to pump our EBITDA because they had a fixed price they could buy us back.
Totally.
At. And, so we signed this deal. We celebrate the first year.
And what year was that?
That was in late 2015.
Okay.
There were all kinds of other learnings along the way, but yeah, late 2015. And that was very close to an M&A style deal because we'd done most of the paperwork. And, what immediately occurred to us like a few months after it, one, we made good money. And so that started this sort of reflection of like, what's the point of this and whatever, which we can talk about. But the bigger thing was we were tired. Like we had been grinding, for 5 years. And we said, now you have to change your business to try to fit the mold of this Red Ventures thing you did. And it was just for the first time, I was like, I don't really want to do that. Like, I don't really want to do that. Right. And it was like, we probably had our worst year ever in 2016.
At that point, were you regretting doing the deal, or did you never regret it?
Hugely. I mean, well, also because they were willing to buy the whole company, but I was so caught up on valuation. And the deal I described.
So that was actually an option.
They would have bought the company full out. We had multiple offers to sell the company. Just not for the number that Jesse Pujji's ego wanted, right? His 30-year-old ego is like, no, it has to be a bigger number, right?
Yep.
I'm worth this, and you're wrong. All you people are wrong about what I'm worth, right? I didn't do coaching back then. I didn't know it. Like now, I would say like, if I'd felt my disappointment and sadness, I probably would have made a clearer-headed decision. I just didn't. It wasn't a clear-headed decision, right? And so yeah, we regretted it immediately. We fired a bunch of people the next year. We were 1 foot in, 1 foot out. So we were trying to convert our business model more like Red Ventures. But we weren't willing to fully commit because we were afraid that, they had this option to buy us and they weren't being clear about it. And I'd had a son and I had a daughter on the way. Like it was a time that was like the worst period of the whole
So you had
journey.
your son in that 2-year period?
I had the son, my son within months of closing the Red Ventures deal.
Oh my God.
And so, which was fine, by the way. I was like, oh, I'm a millionaire. Like, this is great. And I have a kid. This is the right time to do it. Right. But then you become a parent of a young kid. And I just, I wasn't feeling motivated. I wasn't feeling excited. The one silver lining was like the Rick and the Red Ventures guys. I mean, they were so impressive. Like I said this, I think on Twitter, like I thought I was an 8 out of 10 business person. Then I met them and I was like, oh my God, I'm a 4 out of 10. And not in a mean way to myself or anyone. They're just genius. I mean, they're very smart. They're dialed in. They're extremely kind. Like they had found this, like, I said, like I worked at both McKinsey and Goldman and I would look at my bosses there and not in a mean way. Again, I just never wanted to be them.
Totally.
And Rick was the first person I'd worked with in my life who I said, I want to be that guy.
Yeah. You saw the perfect formula, right? It sounds like you saw the person who like on one hand had this out of your brain that can like do laps around people when it comes to analyzing deals and companies,
math, strategy, chess,
right?
4D
But then
chess.
on the other side, someone who like so deeply exhibits like empathy for other people and actually cares about them, and to find that mix is extremely rare.
And is like so comfortable in his own skin.
Yeah.
Right. And it's funny because I tell him these sometimes, like, man, I'm working on myself. He's like, well, I was in a plane crash. I almost died. So I kind of have a cheat code. He's very gracious about it. Right.
No,
So
but
he's
it's
like,
true. It's true. It's true.
Yeah. So anyway, so we did that deal. We really blew up the business. I mean, the original Ampush business was more or less gone by 2018. And this new business that we had created it was basically deeper, more involved partnerships, so on and so forth. We continued to run it. Business was growing. It was kind of coming back, but it was more volatile. And, I got to 2019 and there's something about hitting your 9-year anniversary at anything where you're like, oh, next year's 10, like it causes you to reassess. And I had started coaching in 2017, 18. And one of the big things is like finding up the thing that really truly lights you, zone of genius.
Yep.
And I love, I knew that I wanted my why that I talk about is wanting to help other people learn and grow to be the best versions of themselves, and using entrepreneurship as the way of doing that. And so we did a lot of things inside of Ampush to do that. We invested in companies. We tried a lot, but we never quite got there. And so I think it just became clear that like I couldn't run Ampush as the CEO while also trying to like live that purpose. I just wasn't able. I tried it for multiple years. And that's really what led me to go, okay, I'm ready to kind of transition out. And actually at first we were going to use Ampush as a holdco platform. It was generating a lot of cash flow. And we were going to, what I've done at Gateway X, we were literally going to do a version of that at underneath Ampush because we had the cash already.
And why didn't you?
What happened was, so just to kind of memory lane, right? So transitioned out, we interviewed actually outside CEOs. We ended up selecting the head of our New York office to be a CEO. He's awesome. He knew the culture. He was the one everyone wanted. People cheered when we announced it at the company-wide meeting. The company-wide meeting to announce it and our offsite was February 20th of 2020. You may know what happened a month later, right? The world shut down, right? So all of a sudden the world shuts down. I moved back to St. Louis after 10 years in the Bay. That was also part of my plan pre-COVID and a part of me stepping down and not being CEO. And we just took some time off. Nick and I took some time off. And I think we got back together, and basically between us two and then Red Ventures, who's an investor, and John, who was an important stakeholder, people didn't want to do that. There wasn't alignment around doing that. He was running the company now. He was like, I need my cash. I want to, manage it. Red Ventures was like, guys, I don't want to be Jesse's playground. And Nick was like, I'm tired. I want to take a little bit more of a break. And I was ready to get going as, I took a little more time off. And so from that point forward, we essentially, we ran it as sort of, we were controlling shareholders, Nick and I, meaning we ultimately called all the shots of what happened, but we tried to empower John.
You were the chairman at that point?
I was chairman. I mean, it's a pretty informal board.
Yeah. Oh,
right?
yeah.
The board was me, Nick, and Red Ventures.
Yeah.
And then John was sort of like technically wasn't a board member, but he behaved as one.
Yep.
We'd meet once a quarter. We were involved. I was still involved in helping drive a lot of business to the business. I took most of 2020 off, and then I started Gateway X in 2021. And so I was not super involved. There was different points where it ebbed and flowed. I was really supporting John. Whatever he needed me to do, I would do. Him and I had to recalibrate our relationship a ton because he was used to reporting to me.
Yep.
And now I was like, well, I kind of report to you now, John. Like, you're the CEO. That took him some time. He had to lead a business through COVID, which I wouldn't wish upon my worst enemy. I mean, and poor guy, like he became CEO and COVID happened and it was tough on him.
Probably made him a 10 times better operator.
I'm sure. Yeah. And anyway, so we make it through that. We had a huge year during COVID. We were actually down the next year, which with COVID, we had a bump we weren't expecting. And then the business was back up in 22. And, he at the beginning of 22 sort of said like, I need a change of scenery. I need different people around the table. You guys are kind of off doing your own thing. Red Ventures is no longer involved. Red Ventures was ready to be done with it too, right? From their perspective. And
wait, and by the way, I have to ask about it because you talked about this timeline. What happened in 2017 when the 2-year option was up?
They didn't exercise. I mean,
they didn't exercise it, and they kept their 20-something%.
Yeah,
stake.
they kept theirs as a minority owner. They had gone on to do a totally different business strategy, as most people know, buying all these content businesses.
Yep.
They weren't interested in a marketing services business anymore, and but they've been great partners. So throughout all of that, they've been fantastic and always helpful whenever we needed them. But it's a tiny rounding error for their business. It's not like they were giving us their resources.
Yeah. For context, by the way, for people listening who have never heard of Red Ventures is like the biggest company you've never heard of. I think last I saw, rough valuation on the business is like $12 billion. It's a massive company.
Yeah, and totally bootstrapped too, by the way.
It's wild.
And amazing people. But yeah, so that was kind of, John was like, I'm ready for a change of scenery. I want to get my team a win. He negotiated with us for incentives for his team. Like there was a lot of things that went on where he's like, I'm ready to kind of, and I think if he could have had his ultimate top choice, he probably would have had his own, like found a private equity partner and started to buy companies himself to create, like spread the Ampush culture. I think the Tinuity guys basically give him a version of that that's got a little more scale and capital. And what's really cool is this was a proud moment for me. They're a huge company, but they have a team that's kind of competitive with Ampush, and they're going to have that team kind of coming under reporting into John. and they're like embracing the culture that we built and wanting
It's
to
awesome.
have that as a big part of what they're doing. So that was an awesome moment for him, awesome moment for me, where we're like, cool, this is really a cool thing that we're doing. So anyway, that's kind of the long version of the story.
the 5-minute Ampush update. I love
yeah,
it.
exactly.
Okay, so that is, I think it's awesome foundation setting, and I want to go from that point you just finished on forward to talk about the deal. I think the first thing that I'm sure founders who are listening to this are wondering is like, how do you know when is the right time to sell? So it seems like in the context of your business, John, who was the CEO of the business, like he was ready for a change. It was that the primary driver for why you guys were looking to sell Ampush? Was there anything else contributing to it?
Yeah, I think it's a great question. I mean, in 2015, I think what I'll say is I think most founders undervalue how important it is that it's such a personal choice. So in the case of John, I mean, John was like, hey guys, we're going to sell this business or I might, I need to change the scenery one way or the other, sort of, right? That was kind of, and we're best buddies and trust. So that it wasn't like he was going to surprise us with anything, but he was also raising a flag going, guys, and that was the CEO version, professional CEO version of the founder version, which I maybe happened to me in 2015, 16, which was like, I've worked really, really hard for a long time and I'm ready for something different.
Yep.
And I think like way too many founders who are great tacticians and try to get the answer right all the time go, what's the right time? Is it optimized? Is the valuation optimized? All these other things optimized. And with enough years under your belt, you realize that stuff is far less important than, am I ready? And is it the right thing for the people in the company? And so I think in our case, it was, everybody was ready. Like if it was going to be the holdco, we would have probably owned it for a really long time. But now that it wasn't, it no longer made sense. It was a huge asset in my portfolio that was like, not diversified at all.
Yeah.
I
And
didn't actually touch it.
there's a feeling of like, you don't have full sense of like control over your money.
No, for sure.
Yeah.
I mean, one of my friends in private equity, he says, look, we buy the business because it's a good business. And then the CEO, we either back him or sack him. That's literally, and at first I was like, damn, that's hardcore. Then I was like, well, no, that's actually the only thing I control is who's running the company and what does the company do?
Yeah,
Like,
that is
especially in that
exactly
seat.
their incentive.
Yeah. And that's how we were. We were like essentially active private equity owners. We weren't going to get involved. There was a couple of instances where John and I got into it, which was rare, but it's because he expected me to show up more like a person who still worked there. And I was like, well, I've got a bunch of other things going on.
Yeah.
And so him and I finally got on the same page about that, which is partly my fault. Like I was saying, I'll do that for you. And then I would be late on it or something, and then he'd go, what the hell, Jesse, when you told me you're gonna do something you normally do. And I'm like, shit, you're right. I've got other things in my life. And
Totally.
And so that was part of the,
okay.
the
So
around it.
you got to this point where, so it sounds like all of the founders and John were like ready for the next thing. So once you knew that you wanted to exit the business in some way, like, what do you do from there? Like, what is the process? Like, okay, I want to sell the company. What do you actually go and do?
Yeah. But it wasn't the best year in the history to sell a company. That's
Probably
for sure.
not.
So that is what it, I mean, you could consider timing. And again, like people have pinged me since the deal and going, oh, what should I do? Should I, especially guys who run marketing services businesses. And I've said, look, if you can, if you don't have to, and if you're not in a rush, if you're not like, then hang on for another year or two, because there's no reason not, wait till the market's a little bit better. But in our case, it's the best analogy, and this is kind of like, selling your house. Okay, you decide and you're like, okay, let me make sure my carpets look clean. Am I, I'm repainting a little bit. And so there's a little bit of just like, we spent a lot of time in the beginning of 22, as an example, getting all of our most important customers into really long-term agreements, right? It's gonna be like they're going to be ironclad multi-year agreements. And we may even gave up on price and certain things that we might have otherwise not done to get them into these contracts, right? We made sure our best people were locked down and they were feeling excited about the year and incented appropriately. There was real tactical incentives handed out related to this, what I don't recommend actually normally, but in our case, it made sense. And then, we started, paying attention to the business, spending more time with John. Our board meetings shifted to every 6 weeks. So we would start just being closer to it, trying to drive things forward. And then we started meeting with bankers, and it was interesting because it was a mixed bag. Like we had bankers who were like, I actually don't want to work with you guys. Like I think you should wait. And we have other business. It wasn't like a, slam dunk that everyone was like, oh yeah, this is the hottest deal on the planet. I'm just being completely honest. And
Well, and also,
so we were
right, there are certain bankers, like, they won't think about working with a business unless it's at a certain size because it's not worth their time.
Yeah, there
right?
it was a combo of size, growth, current market conditions. Because they're doing their math of like bankers, for everyone's knowledge, they get paid on a success fee. So they're basically betting on their chances and ability for them to get you a deal good enough that you'll take it. And so some people just look at us and kind of go, either they didn't think we were serious enough, or they didn't think the market was right. They think, I don't know if I'm going to get you a deal and you're going to take that deal. I think I can get you a deal, but you may not accept that deal. And so they have to kind of balance all that out. And one of the big pieces of feedback they got was like, get a quarter or two of this year under your belt, showing that your plan is going to work, because of COVID was such a volatile period for the business. We needed to make it more stable. And so by Q2 or so, John was beating his plan, and we started talking to more folks and started working with a banker. And you, by the way, just another thing is you're not, first of all, too small for like Morgan Stanley or some big company, but you go typically find a banker who knows your space and sector really well. Did you guys use a banker?
Yeah, we did. And we used like a boutique guy who he ran corporate development at IAC, the big media
Yeah, exactly.
company.
Right. So we used a firm called Palazzo. They had been previously at other media related firms. Like they knew this space really well, right?
Yep.
They could talk to us about our business and what the buyers wanted. And, when we ran the Red Ventures process, we didn't use a banker. And I actually think it was a mistake. It was, again, me and my ego being like, I can get us a deal. No, and I did get us the deals, but
yeah, it's not worth paying them the fee. I can just like
that's exactly
do it
what I said in 2015.
Totally. Yeah.
And the work part of it is okay. I think there's a lot of leverage, and I think they can say things and do things you can do that
100%.
you can't do in a buying and selling process. And they help create leverage. They make everyone behave more seriously. Which if you're just me swashbuckling, like they're like, oh, we'll call you next week. If there's a banker, they're like, this thing is happening. So if you either want it, you get involved. So that helps create leverage of multiple parties getting involved.
I feel like it's also just hard for you to be a hard-nosed negotiator with the company that you're going to then be in bed with after they buy you.
Exactly. So there's a lot of value there. We started marketing it in late August. It was pretty fast, honestly. And I think there were, things moved very quickly. So late August, we were a known quantity. That helped. We've been around forever, right? So it's not like no one was wondering who's this random company. It's been around 13 years, right? And so they knew us. So we went in, had a lot of conversations. I think, there were a handful of interested parties who got serious and put together like written terms to actually give us real things. And then I think the folks at Tinuity New Mountain, they wanted the business. They moved fast and pretty aggressively. And again, just like when you're selling your house, yeah, maybe it's this other guy's offering you a little more money, but you're not sure they're going to have the cash in their bank account, or there's other issues you have to kind of sort through. And then there's one guy who goes, I'll buy it all next week and all cash, right? And so that's another big thing founders forget is certainty of close.
Yep.
Is the person going to actually get the deal done, right? And there was a whole span of there's PE firms, these guys were backed by a bigger PE firm. There's like random founder-led companies there was a public company. Like there's all these different kinds of companies, and you're like, ooh, who's going to be the best? What's the best fit? It's also, in our case, unlike a lot of cases where you're the founder CEO, we weren't going with the business. So we were like, get the deal done, get the right numbers, what kind of economics are coming to us. But we also carved a lot out for John to go, hey man, you decide. And almost explicitly had an agreement with him of, we will accept, I think I said 15%. I will accept a 15% discount on mine in exchange for you choosing the right partner for you, right? Like I don't want to sell you down the river.
Totally.
Right?
And I also feel like there's an aspect to it of like, it makes sense to optimize for your economics, but also like you've built this thing over the last 13 years. Like it'd be a shame to 5 years from now just see the company be a shell of itself. Totally.
Yeah. And I think like one of the other many benefits of that Red Ventures deal was I'd had enough of a taste of making money to realize money is not everything. When I was 30, before I'd had that, I thought it was everything, which is why I thought, 9-figure valuation versus a high 8-figure was different. Just my brain had never processed that stuff before. So yeah, we were under terms with them on November 1st. So September, October was taking pitch meetings with lots of different companies, going back and forth, going deeper in the numbers, getting LOIs. They moved pretty aggressively, and we weren't going to slow them down.
How early in the process did you tell these? So your banker talking to a lot of these different firms. How early in the process do they get an indication of like the price that would be required or the terms that would be required to get a deal done? Like how early are expectations set?
Never. We never gave pricing guidance, because why would you do? I mean, someone comes in.
Like, why would you signal?
Why signal unless you need? I mean, you can, as you get closer to someone, if someone's late to the party, which happened in our case, you give them a number and they're kind of like, it'd take me a few weeks. I got to get the
basically
partners
to just
together.
fast track them.
Yeah. Well, once you have a real written offer in your hand from a serious party or a few, right? Then the leverage flips very quickly. First, you're like, get everyone to fall in love with me. Oh, a few people fall in love with me. Okay, now I get to pick, and I can call the other parties and go, here's the number if you want to get involved.
Yeah, now you're like, let me shop this in the,
it's like getting
the most
a job,
tasteful
right?
way.
You go around interviewing for a job, and you make sure you put your best pair of shoes on, and you tell your story, and then you get 3 job offers, and you get to start digging. So that's kind of what that process feels like.
Got it.
In our case, there was a lot of alignment on our side, again, because it meant different things for different people, and that was a really important part of this. And then, the closing process closed on January 4th. So that I was pretty impressed with everyone. We got done in 63 days or whatever. And it was a bear. I mean,
for context, that like Jesse's, so the process from beginning to end, how long was that process for you from when you hired your banker to close?
August to January.
Yeah. So
that's just on the fastest possible, especially given this market.
Just for folks who, haven't been part of an M&A process, haven't sold their business, that is incredibly fast. Like I would say, for Morning Brew, our sale process was 11 months. It's definitely on the longer side. That was from like in the thick of COVID, which is why things were slowed down. But, 4 and change months is like crazy fast.
Great. Yeah. I think it's like 6 to 12 is normally what they'll say. And what I would tell people also, I think ours, the couple things it demonstrated was like, again, we were a known quantity. So like, and you build, if you're in year 4 or 5 and thinking about this, like build relationships now so that by the time you have those conversations, you're a known quantity. I think the other big thing was when there's a strategic need, like when you fit in someone else's glove or whatever the glove, like it just, there wasn't a lot of, it was clear that they needed it more than they wanted it more than anyone. They, that stuff was, and boom. So they went and got it done. And I will say, by the way, because I think it's important, they're buying other businesses. They were amazing throughout that process. That's another thing that founders don't realize. I made that mistake when we divested the EDU business. I took the highest bidder and I'll say it publicly, they were scumbags. They retraded the deal. They kept adding time to the deal. They knew they had leverage. I was building the social business back in 2013, 2012.
Yep.
And they fucked us at every opportunity they got. This was back in 2013. These guys couldn't have been more different.
Yeah.
There was an issue that popped up. Hey guys, we're going to work through this with you. Oh, hey, what's going on with this client? They changed around when they're spending their money. No problem. We get your business. We're going to work with you. No retrade. No, I mean, they did exactly what they said they were going to do. And the reason I'm calling it out is because it's rare. It's actually,
most people do.
as
Most people do
buyers.
not act in good faith when they're buying or selling companies.
Well, the buying, especially because remember, once you sign, just so everyone knows, you sign on November 1st. We signed. They have exclusivity over us. We cannot talk to anybody else. That's one of the binding requirements. So if you're a buyer, you get someone in, and then you go, oh, you know what? We looked at the company. We thought it was worth this. We actually think it's worth 20% less. That's a very common occurrence. And I thought that if they wanted to, they could have done stuff like that to us. They could have picked at things.
Yeah.
And that's just not how they behaved. And I was very happy with the way that they all behaved during the process.
That's
and
awesome.
very collaboratively.
I have one last question for you about the process, and then I want us to finish this episode talking about what it was personally like for you. Around the process, tell me for you you have all these different variables that are involved in a deal. You have what amount is cash versus equity? How much are you getting today versus in the future, and how far in the future? Who is the partner? What is their goal with why they're acquiring us, and how much autonomy will we have? How much will it be our vision versus their vision? I'm sure there are other things that also go into the process. How did you, in your head, prioritize these different variables, and what did you optimize for?
Yeah. I think the number one thing for me was cash at close for me and my family. I wasn't running the business anymore. I don't control a lot of what's going to happen if there's an earn out or anything else like that. And so I was like, all right, like what am I taking home when this thing closes? What am I giving up? And one funny surprise, by the way, in the process, the previous time I'd done this, like lawyers and accountants, they all obviously turned to me. I was the CEO and the founder. Now I was not. And one funny thing that happened that was like, it made sense to me later on was the lawyers and accountants kept coming to me and Nick for every decision. And actually, they left with one of their jokes, and we were doing like superlatives at the end of the deal. And one of our jokes was John was the most left off person of emails, and it was actually kind of crazy. Like, but it did reinforce the importance of ownership to me, which was as a matter of course, and the bankers too. They came to us. They go, "You're the owners. What do you want to do here?" And that was like, whoa, that's and so that was an interesting aside. But cash close, I think number 2 was, was the team going to be taken care of both financially as well as a good culture? Are they going to preserve that? Are they going to build on that? That was super important to me on the margin, relative to cash. Once we had hit a certain number, I think. Those are probably the 2.
Okay.
And I mean, yeah, it's different when you're going with the company, right? Then you have your comp plan and your earnout timelines and all these other things. I coached John a lot through that, by the way. Like I helped him negotiate those things.
Well, just speaking about negotiation for a sec, what's your negotiation style in these types of conversations? And talk for a second about the interesting clause you negotiated around if you died.
Yeah, but that was a different deal. That was a Honey fundraise. Yeah.
Oh, what?
I can bring that up, but one funny thing that happened to me during this deal was I remember feeling very uncomfortable in the middle of it and not knowing why and not knowing what to do about it. And the reason I realized later, because later on, typically when I negotiate with someone, I have built a relationship with them. I have a lot of trust. I'm the kind of person who's on text or can just give them a phone call and say, hey, let's problem solve this together. Like I believe in collaboration and problem solving. And like, I always believe 1 + 1 can equal 3 if you're creative enough and you're sort of, you're not coming from a place of fear. I had no relationship with the other party up until really the last couple of weeks of this. They had met John. He pitched the business. He was going with the deal. And, he obviously cared about his own economics. He cared about ours too, of course, but not in the same way. And so there were a handful of like silly things. There was like the date moving. There was a few big items that felt very serious at the time. And I couldn't pick up the phone and just call Zach, their CEO, and go, hey man, help me. And I didn't have that actual trust with the other and with the other person. And that was super uncomfortable for me. And even like I remember the term sheet was like pretty back and forth. It wasn't not normally how I would do it, which is like I would get on the phone and go, what's really important to you guys? Here's what's really important to us. Let's put this on a page. Let's find the Venn diagram and let's find a deal we're both really, really excited about. And so we got there. I mean, the deal ultimately happened that way, but that was a really good learning for myself. I was talking to my coach after, like, man, I felt like I was entering into this hugely important thing for my life.
And you didn't have control.
One hand tied behind my back.
Yeah.
But reflecting on it, there's no reason I couldn't have asserted that. I just didn't. It's not like I could have said, hey, hold on, before I sign this thing, I would like to meet these people and get to know them a little bit. And like there was like a very serious call with 30 Zooms and lawyers and all these people on right towards the tail end where we had to sort through the final issues of the agreement, right? There's like, what's this going to work? And how's the non-compete and all these things. And I realized it right after that call because I ended up leading that call from our side for a variety of reasons. And I was joking with their private equity guys and their CEO. I'm like, guys, you want to tie me down for so many years, and then I realized I was like, oh, I'm really good at that. Like that's a skill I have, and I haven't been able to use it up until now.
Yeah, your banter is an incredible tool.
Yeah, but it's like trust building. It's not taking yourself too seriously. There's all these pieces that go into a good deal. Yeah, that like most of them I didn't get to use during the process. And towards the end, I did a little bit because there was a few final things, but. And I was like, shit, like that's a good learning for me. And I could have had that for much earlier on in the process.
And why don't
my
you
negotiation
think you
style
did?
is problem solving.
Do you think the reason that you didn't engage like the CEO of the business that bought you directly because you were afraid of stepping on John's toes? Like what was the reason that you didn't do what you could have?
I'm a beginner. Like I've never been the chairman founder, but not the CEO of a business. I just didn't know what to do, I'd say. Yeah. And I think part of it was like, it was John's thing and I didn't want to create conflicting signals. And so it was just like, let him lead. There was bankers also. I asked the bankers, you don't need to do that. It's not a big deal, which they're probably right. I mean, the deal got done. It wasn't, but for me, I think I would have felt more comfortable and been better if I had some line into someone on the other side, which I didn't really.
Yeah, it's so interesting. It's also interesting to think about, right? Like you mentioned with the term sheet, it's not the process you would have run, but like still worked itself out, which is just an
Totally,
interesting
yeah.
thing. And just seeing like,
I bet you it would have gotten done if I had disappeared if I was in the
Totally.
hospital for 90 days and couldn't talk to anybody. I would have just had this check show up in my bank account.
yeah, so
So-
interesting. Okay, we're gonna get into the internal stuff. If you had to, you think about the journey from August to deal close, or even to today, from beginning to end. I want you to just start pointing out to me specific emotions that you felt in this process, and when you felt them, and kind of why you think you felt them, and just bring up any emotion that comes to mind first.
Yeah. God, so many, man. I think like I felt some fear early on, and John would call me out on it because he's never sold a company, he's never pitched like buyers or investors, and I have, and I'm pretty good at it, and so I felt fear early on, or I was like a little micromanaging towards him, that it like we almost got an unsolicited offer earlier in the year. And I was just like freaking out. I was like, "Oh, wait, make sure you don't say this, do this, say this." Like there's just a bunch to manage around it, and I sort of probably not the best version of myself. That was like I remember that feeling. There was I can't talk about it, but there was one buyer in the process who was like such a cool buyer, like such a well-known brand name company, and I don't think they were the right buyer, but I felt a lot of pride that they took a long, hard look at the company. I felt really, really like that's super.
You felt
cool.
like a badass.
Yeah, I felt like a badass, and proud of the culture, and proud that it wasn't like they took a look and like, we're good. They spent hours, days with the team, and were waffling, and half the people who didn't do the deal called me and said, we should have done this. So it was a cool one.
That's awesome.
At some point, I'll share it, and that was pride. I think like a ton of excitement and gratitude for John and the team when we signed the term sheet. Cause that's, as from the process, like that's the moment it really gets real, like at that point you're 80% to close, right? You're very likely. And so I felt a lot of pride, at that point. There was a lot of fun during the process. So we like my long-term VP of finance and HR became the COO of Ampush. Then she actually left. She left like a year and a half ago. She went to be the CEO of another startup. Didn't work out. And then we convinced her to come back to help lead this deal.
That's awesome.
So she was back, and then me, Nick, and John, and we were like, it was very Last Dance vibes. Like, it was like, yeah, this is it. We're calling each other. We're texting. We're figuring it out. Like it was just fun. It was like really fun. I also felt a lot of gratitude for the people like Kahani, growth assistant. Like they were helping me. It took a lot of my time, and more than my time, it took a lot of my like mind share, for somewhat obvious reasons. There was a couple of like periods of frustration. Like the biggest one, again, in retrospect, is not a big deal, but these things are so tense, right? Like we were ready to close the deal, and they said, let's close the deal in December, such and such date. And then like 3 days later, they said, never mind, we want to close in early January. And it was fear and frustration. Like, what do you mean? Are they looking at another deal?
You were just ready. You were just ready for it to be done.
Well, no, it was more fear. Like, are they giving themselves optionality to look at a different deal? Are they cooling out? Are they like, what's going on? You don't really know. Yeah. And it's like, I called my buddies in private equity. I go, this is what happened. And they weren't reassuring at all. They were like, yes, it could be the reason they're saying. It could be they just need more time and they don't want it to show up in their financials for a year, which is like the stated reason. They want to give more time to communicate it internally. They're very reasonable reasons. It could also be they found another deal they like more. It could also be this. And these private equity, I'm like, fuck, this is scary. Like, what? We've spent so much time and energy on this. So there's a lot of fear there.
It's also just such a good illustration of like when you are feeling fearful in any of these scenarios, it's amazing how good our brains are at story making. Totally. And also how often, the majority of the time, the simplest story is the answer, but like how good we are at creating stories that go to the extremes of painfulness.
It's also, by the way, but back to my whole thing of not having a line into the other side and not having trust built, it also for me was a signal of that was lacking. Because again, when I've done deals in the past, if I actually have human trust with another person and he goes,
you wouldn't worry about it.
I get it. You feel a little worried. Like on my honor. And I'm, by the way, I'm a very candid person and I'm very okay asking uncomfortable questions. So I'd be like, dude, are you guys looking at someone else? I would have that conversation with the other side normally, right?
Right, but you couldn't do that in this situation.
There was a CEO, like, there's all these other people there, and it made it harder for me to. But it was a good point out. We signed the deal. We did what's called a split sign and close. I think I told you this offline, but so we signed on the 21st of December and we closed on the 4th. So imagine the most anticipatory 2 weeks of your life. The deal is done.
This is, I don't know if we're going to run this, but this is the M&A version of Blue Balls.
Yeah, I didn't want to say that, but yes, it's just oh my God, is it gonna it's gonna happen? It's yeah. And then your family, nobody knows you should congratulate you. But I was that's not closed. And my dad's a real estate guy. So he's you stay on this every day until it's not done until the money's in the bank. So there's all these, it's just sitting there. And that was just a highly anticipation oriented period. It kind of just preoccupied,
totally.
Every day is preoccupied. And then I flew up to New York for the deal to actually close. And that was the night before me, John, and Nick got dinner, and there was just tons of appreciation and gratitude, and their wives came, and there was just really, I think one of the things I'm proudest of us as a group is, this is something my coach really introduced. He's typically when you go through a salary negotiation with someone or a challenging situation, everyone basically prices in that you're going to hurt your trust with that person a little bit. I'm going to piss them off a little bit, but we'll get to a place. He's always no, how do you get your trust to go higher through a process like that?
Yeah.
How do you love each other more and trust each other more? And actually, when you reframe it that way, you do things very differently. And so that was I felt we all came out of it feeling more gratitude and love for each other. There was a really interesting, well, actually, I think it happened around then. There was it was weird for me and strange, I'd call it. And it made me feeling I just being totally candid, a little bit under acknowledged or lost in the process. Because I'm just so used to being the man, the guy in the middle. When it's Jesse, he's Jesse Pujji. He's this guy. He's going to be the guy everybody falls in love with. And nobody gave a shit about me. I was just shareholder A just John was the man, and the team, and which, by the way, I love, but there was a part of me that was well, what about me? There was definitely a part
very
of
rational.
Me that wanted the glory of, and then part of also the glory of hey, I ran this business for 10 years.
Yeah.
And this guy, these guys ran it for what about me? I built this thing. So there was definitely a little bit of that, and wanting, it ultimately came from, I think, from Nick and John of just saying acknowledging me, going, yeah, dude, we know that you were critical to this, but it was definitely, that was a feeling as we got towards the end of of wanting to be acknowledged or wanting to be, get some credit for it, which is hard to admit, but true.
No, and I think it's such a natural thing. I'm just curious if you can, from your perspective, identify why you want that validation. What do you think was the root of why you want to be recognized for that?
I don't know. That's a good question. I mean, I think I worked my ass off for it.
Yeah.
I feel one of the downsides of the 3 co-founder structure from early on was always we were the founders. And I think at different times, if I felt I was, without me, it couldn't happen. And I wanted someone to say that. I don't know, just wanting to be seen, maybe. Just anybody wants that.
I can imagine also again, this identity for you as an entrepreneur and a business builder is so core to who you are.
Yeah.
If there's anything
and Ampush was so core to who I mean, totally. I think I wore t-shirts publicly, kind of like some founders do, for 5 years. And if you saw me externally at a conference, I had an Ampush t-shirt on.
Totally.
And I remember I hadn't worn one during the post CEO phase as a part of changing that. And then I was wait a second, this is, the other funny thing that happened to me, Alex, I don't know if I told you about this, but I stopped being CEO and I left San Francisco in the middle of COVID. And so there was never the party. There was never both personal and business party of goodbye, Jesse. There was an all hands on Zoom or something.
Yeah,
but
it was more like the Irish exit
of running a company. So I felt there was this missing closure. And then I think as the deal got done, the day the wire got sent, I felt a crazy amount of probably anticipation, because it takes 6 hours. I was I can't feel happy. I just don't feel it yet. I don't feel it yet. And that was
were you constantly checking for those 6 hours, your bank account?
Constantly texting people. The bankers in the middle of it wrote us a note hey, did you guys get your wire? I'm wait, does that mean you got yours? You got paid before? So there's this funny process. Where's the money? And my dad wouldn't call me until he confirmed I got the money. he's like, did you get the money? And then as soon as I was like, yes, he's like, you know, like, so there's like that day of, but then
And were you were you with your family? Like, were you with your wife and kids when the wire hit?
Well, so I'll tell you, yeah, it's a great story. So I was with Nick and his family in the morning because I was in New York. We did the phone call where you're like, signatures approved, blah, blah, blah. The money's being sent. Him and I took a long walk in Brooklyn and did a lot of reflecting and sort of just like appreciation, acknowledgments for each other. But it felt, he was like, dude, are you okay? Like, cause I just wasn't fully there yet. I was like waiting for it. And then I went and got lunch with the private equity partner from the firm who bought it. And then it finally hit that afternoon. Then I was like, oh, let's go. Like that, like it was I felt the release, physical release. And then I flew home that night and my wife the kids were all decked out in Ampush gear. And they had like the music like playing when I walked in. And the kids were so excited and so happy about it. And it's really, you know, one really cool part about it is like, it would have been cool to sell the company in 2015. It was so cool to share it with them. And they're both old enough now to like actually be like, oh, I know that like that means something really big.
Yeah.
And that would have happened.
To feel excited for you.
Excited for me to see it happen, to understand what that means. Like, the funny thing was when we first got under LOI, I told my son, I'm like, we're selling Ampush, and he got upset. He's like, no, don't sell it. You're the founding father. He calls it like, you're the founding father of Ampush. You can't, that's your company. What do you mean? You can't give it to someone. Like, he was really upset by it. And then I'd say like a big crash of sadness happened on that day. Like, and we sold it. Like, it's the first time Nick and I don't have anything we're working on together in 20 years. And I think it hit both of us. He was crying. I was crying. Like, it was.
And are you a crier? Like, do you cry often?
No, not a huge one. But I do.
Yeah.
And no, it hit me. I mean, it hit me big time. And I think like even it's a little surreal of it not being ours anymore. It's been such a big part of my life for so long. So it was like kind of like feeling a little bit like feeling for your cell phone and it's not there anymore or whatever. Like there was that feeling of it just being a normal part of things. I'm still in a couple of the Slack joint channels. So I'm like, hi guys, I'm still here. I said I miss you to them the other day on there's like a business development channel. I was like, I miss you guys.
So funny.
But yeah, it was sadness. And then I think like a huge way that one of the coolest things that happened was the next couple of days, and that happened again this week. 2 days after the deal, we announced it to the employees and former employees because they were all getting paid, right? And then it was like I felt tons of gratitude, but we got barraged with messages. I'm so like we should share some of them, but there's like, I'm so glad I started my career there. You guys changed everything. I'm so happy for you. I know this is what you like. There was we had a huge alumni base and all these people pouring in. And then the external version of it happened this week when we announced it publicly, which was like, oh my God, these people I haven't talked to in 5 years. And people who bet on us early, you know, like there's a lot of humanness involved in this. I started when I was 25.
It's insane.
Right. And now I'm 38. And so there was like, and I don't think there was ever a proper moment to go reflect on the whole huge journey. And now that moment is here. And so it's been really great to have that. But a lot of gratitude from my wife. Like,
well, I was going to say you wrote an awesome Twitter thread that we should link to in the show notes. And honestly, I feel like that could be an episode in itself because you had all these lessons in that thread, but you finished your thread. The last tweet was about thanking your wife and having gratitude for her. Just talk about for a second, because I feel like it goes underappreciated sometimes, kind of like the level of just sacrifice and support that any life partner has to provide to another partner who is an entrepreneur and has their own business. Just talk about that for a sec.
Yeah, it's a superhuman level of appreciation, support, tolerance. That's a word that comes in some ways. Like it's, the best analogy I was like, it's like, imagine a training for an Olympic sport. I feel like people can visualize what that looks like. You're up early in the morning, you're home late at night, your diet is unique. You have to do certain things on the weekends you otherwise wouldn't have to do. It's hard to be mentally present. I had, my EQ has grown as I've grown, but I had no EQ in the first 5 years. So, wasn't open to few so yeah, I mean, I think it takes a lot to as a person in some ways take a back seat to somebody else's thing, right? Like knowing like you're late to something, you're going to cancel something. And even just being in that status with another person, I think it's obviously unfair in retrospect, but like that's the status. The status is something for your business comes up that's important. My thing is going to get deprioritized. And I think I got much better at it after we had kids, but those first 5 years, I mean, it was, I was working a ton, and I was mentally, when I wasn't working, I was mentally not fully there. And she's still here. So she didn't have to be, I mean, like, and she was supportive of that. And, yeah, I think it's one of the most unseen roles in any kind of success like this. And I'm even now, we're still unpacking sort of, my appreciation, gratitude, the things I didn't even know I was feeling or know that I needed, that I was getting from that. And yeah, it's a big one.
Yeah, and I like how you just talked about it in retrospect of being unfair. It's like I almost view it as like, the a partner to an entrepreneur is like so beautiful in the fact that they're signing up for ground rules that are unfair ground rules, yet they're still doing it. Totally. And they're doing it unapologetically, which is amazing.
And the other crazy thing I think we don't say enough is, if you're not doing it, you have no idea what it feels like or what the person's going through. So they do it. I don't mean this in a negative way. They don't have an understanding or empathy because they can't. It's like hard to know, and yet they're still doing it. Yeah. So it's like I'm going to support you. It's almost parental, right? Like I'm going to support you. Even though I have no idea what that's like, I don't even know what you're feeling or going through, but I'm still going to somehow choose to support you. That takes a big person, Yeah. It takes a lot 100%. Of love and a big heart.
Well, I think the tape's been running for like over an hour, and I feel like we could go for another hour, but given our other episodes are 15 to 40 minutes, if you've made it to this point of the episode, just shoot us an email at thecrazyones@morningbrew.com. I just am so interested in how many people made it to this exact spot. Seriously, thecrazyones@morningbrew.com. Just say hi. I want to see how many people got to this spot. But we're going to finish up with some rapid fire. I have a few fun questions for you, and then we'll call it a night. First question is, do you feel more successful today than before the deal closed?
Yes.
Why?
I thought back in 2014, like having the stamp as exited entrepreneur, successful entrepreneur would mattered a lot. And then for many years, I was like, it doesn't matter. Rick is this guy I really admire, and he's not exited. He's been running his business and I think there is something to it. Like, I think getting it across the finish line matters to the world, like people, the way you're treated, the way kind of that success. And I think I'm getting used to this amount of cash, but like there is something unique about it, and getting to plan and think for the future, or feeling very secure and safe in the family. I had that to some degree before, but now it's like really there. And it's like, I get, luxury to example, maybe thinking about is like, I was talking to my buddy the other day about like, could we start something that would like be here in 100 years? And I just have never thought that way before. Never had like thought I could think that way.
Totally. Second question. Have you made a fuck you money purchase yet? Or are you thinking about it?
I think you know the answer to this question. I'm buying myself a very nice car.
But I will say that Jesse is always judicious about his finances, and so it is a car that there will be tax benefits of buying.
Yes, I will write off the entirety of this large purchase price. And I got the dealer to come down $23,000 by calling around. I called around the country, and I found I created some leverage. So
there we go. Yeah, you're gonna be the grandpa that's going gas station to gas station when you're older, seeing which one's selling a gallon for a penny less. My grandpa does that. Next question is, have you thought about how you raise and support your children in a way that they have the hunger that you had as a child, given that you have money now, that can lead to entitlement?
I've definitely thought about it. I don't know that I have any genius answers to it. I mean, I think I'd love for them to have the motivation. I mean, I've spent a lot of time on motivation, but I'd love to have for them to have as much or more motivation than me. But I think one of the issues with the premise of that question is like my motivation came from like maybe seeing hard immigrant parents, and we talk a lot about the fear motivation or the chip on the shoulder being the driver versus a like love or desire oriented motivation where you're actually trying to go do something interesting and compelling. And so in my perfect world, they'd be more motivated or as motivated, but from a different place. My son is very inventive. He curated like a widget toy the other day with Legos. And I want him to be able to pursue that with reckless abandon because he likes it and he wants it, not because he has to, or not because he feels the need to make money. and I think he will ultimately. But I think, and my daughter's insanely creative. I mean, she tells entertaining stories at the age of 5 that, and so like I want her to be able to pursue that, assuming that's what they choose and want
Totally.
to pursue as people. So I want them to be motivated I want them to be enabled and motivated to do great things because they want to, and they're drawn to it. Not in my opinion, my reasons were like, I wanted to be rich because I saw my parents struggle and wanted to be a business baller. Like it was just a very different motivator, is a different motivator. I think the biggest thing is like, there's not like some of the thoughts in my mind is like, there's not going to be a lot of free money given between me and them. And I don't just mean when they, when I die, which is also probably not going to happen, but, like if they get allowances, they'll do chores for them. If they want to spend money on random shit, I want them just like I did to get an hourly job. I think an hourly job when you're 15 or 16 is one of the great balancers, right?
Yeah.
So I don't think there will not be a lot of like, here's your credit card, you have a budget and allow like that just won't happen regardless.
Yeah, they're going to work for what they earn.
Yeah, exactly.
Yeah, makes sense. Well, it sounds like kind of the North Star there is very clear, and you want them to feel this love-based motivation for the things they do as you get a better sense of like the tools and the language you use in your life to try to guide them towards there. I'd love to do an episode where we kind of really unpack what is the playbook, because not that it's a very common challenge, but I think it is a very real challenge for a group of people that experience it. Last question for you, and then I promise we're done. What's next?
Yeah, one of the benefits of the way we did this for us was, Nick and I acknowledged this, was like we thought about selling the business in 2020 when we decided to come out of it. And we probably, we would have just been finishing an earnout right now or something like that. And instead we kind of got the benefit of, we took time off, and then both of us have started new things and we're working on new projects. So I have my hands full with all the stuff I've gotten going, which 3 companies have started, the venture studio. There is a part of me, even before closing the deal, who wanted to reduce the time on my calendar a bit. We've talked about my schedule and bring that down a little bit. And so I think that still holds a little bit. I'm curious to see, I am like not trying to over control how I will respond and react to this. At the moment, I'm like, no, I'm building Kahani and there's this going on. And, these things are getting off the ground. I still want to build this venture studio. I still want to work every day and build something really cool that I'm really proud of. I suspect there will be some edits and adjustments as I go. One example is like, can I use some of my talent and capital to build again something that's just for the benefit of humanity versus making more money? Like that's again a question I don't think I would have even asked a month or two ago. I told my coach was asking, I was like, I think I will do things less because I feel like I have to and more because I want to. And I don't mean that in a big way, because I think in a big way I'm doing what I want to, but I mean like I'm the key sales rep for Kahani right now. Like I take the sales calls, and I like it to a degree, but it's like, you know what? Like maybe we should hire a person to do that so I could get like 7 hours back on my calendar. It's like, so there's stuff like that where I think I'm doing them from the more foundry need to get this done thing that I think I'll probably have less tolerance for.
I love it. Well, I'm incredibly appreciative for you walking through the journey, and also kind of what the emotional experience was for the 13 years that was building the business, and the reflection on selling it. Because I think you painted such a good picture of kind of this rainbow of emotions that founders experience. And I hope our listeners found it valuable. And, I know as, a friend, and I look to you as a mentor, I've learned so much just from your process of building your businesses, and, just another notch on the belt. And I know there's many more to come.
Yeah. Thank you. The one thing I end on is, with the benefit of this many years and this kind of view of hindsight, the people are really the only thing that preserve through any of these things. And of all walks in life, like our biggest clients are, who at one point took the business in-house and churned, they're still my friends. Some of our like a lot of our employees, I've been going back and forth with all the partner managers at Facebook who got us to be in the special program. Like those relationships endure beyond any of this stuff. And it's just a reminder to everybody and myself of like, that's also why they should be the most prized and prioritized part of any of these things. but it's so true. Like it's just not Ampush doesn't matter anymore technically to me, right? The numbers don't matter. None of it. It's not mine anymore. But all of these relationships and people are very much a part of my life, and it's just a really important thing to remember for anyone listening.
100%. And on that very similar note, if you are a listener that is still listening to this episode after an hour and 15 minutes of us bantering about the journey that Jesse's experienced over the last 13 years, we thank you. And I just have one last ask of you before you sign off for the day and wait until next week's episode of The Crazy Ones. And that is, shoot us an email at thecrazyones@morningbrew.com and just say congratulations to Jesse. I want to see how many congrats we get for Jesse, because what he's accomplished is awesome. And it'd also be cool to just meet more people in our community, see how many more crazies there are out there. Thanks everyone for listening. Thank you guys so much for watching this episode of The Crazy Ones. If you're an entrepreneur or a builder and want more great startup content, make sure to subscribe on our YouTube channel or wherever you get your podcasts.